Good evening, everyone. This is Tashwita Gupta, your facilitator for today. Uh, may I get a quick confirmation over the chat box? Is my voice audible to you? That's great. Okay, so welcome you all to the Grand Revision session of AAA, and this is for September 2025. And I will be making notes today, okay? And in those notes, I'm going to put them along with today's class in the description box of my YouTube channel. So before I begin with the session, I will just let out some rules of the session because, of course, we are here for like a stretch of 2 to 3 hours, and I don't want that it might stretch to 3.5 hours too. So I don't want that I avoid or ignore any doubt. And I also don't want that I get distracted when you ask your questions, right? So the rule number one would be that you ask your query when I take a pause and ask you that is everything clear. So ask your query when we are done with the topic, done with that topic. And please be specific to particular topic that we are talking about. So if I'm talking about quality management, please do not go forward and ask me something about maybe evidence. So, or maybe review and reporting. So we will stick to what we are doing. Whatever doubt you'll have whenever the topic comes, you can ask your query then. Then the session is recorded, so recorded class is available. So I don't want anyone to have this fear that what if uh, I'm not able to attend it fully? Will I get the recording? Yes, and the recorded session will be uploaded on YouTube. And the students who are uh, like from the batch, from the TG professionals batch, you guys will also have this session on your portal. So this is the recording session is going to be available. Now, are you supposed to make notes along with me? No. I will give out a handout to you after the class. Like whatever is typed or whatever is talked about in the session is going to be there on this Word file, which will be shared with you later on after the class is over. Fourth thing is that I want everyone to make sure that they're part of the WhatsApp group. Now, the WhatsApp groups that I'm talking about, uh, that's where the updates are given. For example, your pre-September debrief, pre-September mock debrief, your handouts, all these things like link for today, it was available on the WhatsApp group. So you have to be part of WhatsApp group. So make sure that you just DM a hi on this number and ask them to put you in the relevant WhatsApp group of your subject. So that will help you stay connected. Okay, this is my team's number, and you can just drop a hi and ask them to add you into the relevant group. It's a free WhatsApp group where the resources are shared. If you're already part of it, that's why you're here. But once the recording is there on the YouTube, I'm sure there will be many students who might have been waiting for the Grand Revision live, but were not able to attend the live session because we actually have it on Zoom, right? So Zoom link was shared on the WhatsApp group. And then we are supposed to make sure that we are active throughout the session. So you have to participate, like you have to share your thoughts. You have to, I'm not saying that not just asking doubts, but also sharing thoughts. When I ask you, is it clear? Your momentum and your participation will keep me motivated as well to go on. So are we all clear for the rules? Shall we begin with the session? That's great. Let's resume. So, guys, first let's see a handout which is basically given to you by ACCA, which should be your guide to see whether you have done various things or not. Okay. So, let me share my screen with you. So, AAA syllabus from ACCA. Let us see. So, this is the most recent syllabus that was out for September 25 to June 26. Okay. Let's have a look at it. So, first of all, there is international regulatory frameworks for audit and assurance services. So, basically, this one is kind of a time pass thing where we are talking about the body which makes the international standards on auditing. Then, money laundering. I hope we all have done money laundering. We'll discuss that today as well. Laws and regulations, basically auditors responsibilities regarding non-compliance with laws and regulations is what this area of syllabus is about. Then code of ethics, then fraud, then professional liability, quality management, advertising, tendering and obtaining professional work and fee. So how should you advertise your services as an auditor? What is a tender document? How do you put a tender? Then once the tender is passed, like how do you set your fee? Then what is an engagement letter? All of that. Then planning and conducting of an audit. Planning materiality. So this is basically the portion of audit risk. So I hope you all have done audit risk and ROMMs and business risk. So that's part of the planning. Okay. Yeah. So that's part of the planning. Then evidence and testing considerations. So here we are talking about collecting sufficient and appropriate audit evidence. And then audit procedures, using the work of others, group audit, completion review and reporting. So in this we have first of all how to deal with subsequent events, that means events after reporting period, how to deal with going concern, then completion and final review. Then we have reports to those charged with governance. Then you have other assignments like audit related assurance services, specific assignments like review, due diligence, forensic accounting. Then you have your cash flow. So, a lot of things are there. Then, audit of performance information in the public sector, reporting on other assignments, assurance of sustainability information. Okay. Then, current issues, professional and ethical developments, developments in sustainability assurance, other current issues. So basically, other current issues will be having your data analytics, okay? Uh, and here we have sustainability assurance, which is very important for our syllabus. And then professional skills, you have to do nothing for it. It's an application thing that you are having good communication in your typing. You're analyzing the case study well. You're evaluating the case study well. All of that. So this is what my syllabus of AAA looks like in one piece of paper. We are going to touch on everything. We are going to revise everything. So this session can be used for revision, of course, not for complete preparation. Okay, let's see what's next. See, in quality management, explain the principles and purpose of quality management of audit and other assurance engagements. describe the elements of a system of quality management. I'm going to give you 8 such elements of system of quality management that you have to learn. So we are going to discuss that. Evaluate firm system of quality management, that is application. Evaluate whether quality management has been applied to a given engagement. So when we were doing Super 20 questions, there were such questions where they asked you whether the quality of this audit is correct or not. Evaluate the quality, and or they've written evaluate ethical and professional issues or quality issues. Right? Then if you see another area, that is basically your mm, okay. Hmm. Current issues. Discuss current developments in auditing standards, including the need for new and revised standards, and evaluate their impact on the conduct of audits. Okay. Discuss current developments in business practices, practice management, audit methodology, and evaluate the potential. All this is application. Then the proposed changes to the audit profession and critically evaluate the implication of these changes for companies and audit firms and their impact on audit processes and quality. Uh, Discuss the impact of significant global events on audit practice. Techniques such as data analytics, sustainable reporting, potential impact on the conduct of an audit and audit quality. Okay. So if I just look at the syllabus, these are the two areas where we might see that we are not so much prepared, right? But the rest of the areas, more or less, we know something about everything. We know what is money laundering, right? Define money laundering, explain the scope of criminal offenses, need for ethical guidance in this area, how accountants meet their obligations. So, all of that we know. But we will discuss quality management and sustainable assurance in detail. And if you see, they have given you very much in detail that what standards IFRS could be tested along with audit. So when you have to design procedures, you can be asked for inventory, non-current asset, intangible asset, biological asset, literally everything, investment property, asset held for sale, financial instruments, fair value measurement, government grant, leases, impairment, provisions, borrowing costs, employee benefits, share-based payment, taxation, related party, revenue, statement of cash flow, business combination, events after reporting period, the effect of foreign exchange rates, segmental reporting, financial statement notes and related disclosure, earning per share, change in accounting policy, payroll, and other expenses. So they can literally ask me audit procedures on any particular IS or IFRS. There's no such IFRS which they have left, right? So this means SBR knowledge is equally important here. So all of you know that tomorrow we have our grand revision for SBR as well. So does that make SBR grand revision important for you as well? Of course, yes. So we are going to join that to revise all the standards that are being stated here. Okay. Now let's go one by one as per this PDF and revise the areas of syllabus. Let's start with money laundering first. So let's start our note making. So money laundering, we need to first tell them what do we mean by money laundering. That's the first question. So what is money laundering? It is a process where the source of illegal funds is, uh where you hide, or you can say it is a process where the source of illegal funds is hidden by various transactions and resorting to multiple transfers from bank to bank and country to country to finally give it a legitimate shape. In short, it is a process of converting illegal money into legal money. And what are the various steps involved in money laundering? We have three steps. Number one is placement. Number two is layering. Number three is integration. So we have done one question in the Super 20 question list where there was this person who had a lot of bank accounts abroad, and he was getting his own personal tax filings done by the auditor of the company. I forgot the name of the question. I think it was Clean Company. So there we applied this knowledge. So what are the indicators in a case study? That is very important. What are the indicators in a case study which might suggest that there is money laundering happening? Number one, when there are a lot of cash transactions. Because see, if you're getting something in your bank, you cannot hide it. That has a record, that has a trace, that has a trail. But cash transactions can be hidden. So if there are a lot of small cash transactions, that's one of the most, I would say, uh, important trigger point of money laundering. Then you have another indicator. Then if there is a lot of offshore bank transactions or offshore transactions, especially in countries which are like tax haven countries, right? So first of all, you have cash transactions, and then you're dealing a lot with countries like where there are no taxes, where you can do easy transactions. So all of that raises the eyebrows of the enforcement officers. Okay. Then if you have a lot of, or you have some unusual, highly material transaction, even that is an indicator of money laundering, right? So these are few indicators of money laundering, which if you see in the case study, you will point it out. Then, what is ACCA's guideline about money laundering? Can you comment on that? Can you tell me ACCA's guideline of for anti-money laundering? What were the points? Appoint an MLRO, KYC. Okay. So the first one is appoint an MLRO. Who is this MLRO? He's a senior member who's nominated, money laundering reporting officer. And what does he do? Hmm. He's nominated. What does he do? He prepares the report. If someone has a suspicion on anyone regarding money laundering, we report to MLRO and then he prepares a report. He prepares the report of the suspect, nature of the suspicion or the event, and the amount involved. And then he collects evidences regarding it. And then he finally submits this report if he feels that it's valid to the relevant enforcement agency. Hmm. Right? This is what he does. Now, you tell me, is money laundering a criminal offense? If you are an accountant of a person who's doing money laundering, are you also a criminal? Okay. Is tipping off a crime? What is tipping off? Tipping off is basically telling someone that you are suspected of money laundering and there's an investigation going on against you. Now, that person will hide all the stuff that was there and he will remove all the evidences against him. So, that is also in itself a crime. And somebody might not know that tipping off is a crime and can do it unintentionally. That's why we need to train our employees from grassroots level that this is what money laundering is. You're not supposed to tip off. You're supposed to rather report the suspicion to the MLRO. You're not supposed to go to the person only and tell that I suspect you or I doubt you. That's not correct, right? So the second point which ACCA gives us is KYC, that is know your client procedure. So initially when you take any audit client, make sure you check who is the owner, what are the sources of fund, what are the sources of funds, what is their company reputation and background, all of that. Then etc, right? So this is all that we have to check. We have to get the KYC done so that we don't onboard a client which is having, like for example, someone is a politically exposed person who has access to public's money. So they have a lot of cash around them, a lot of cash transactions around them. So there's a highly likely chance that this person might be involved in money laundering. Third is enhanced record keeping. Enhanced record keeping, why? In general, for your clients, keep records for more than 5 years. In case there's any investigation, at least you will have something in your hand regarding that client, right? Then you have communication and training. Why? As I said, people don't know what is tipping off. People don't know what is money laundering. A general uh, receptionist might not know about money laundering or tipping off. We need to train everyone that, if you suspect any such thing, you're supposed to actually go and report it to MLR, right? Then policies and procedures. As an audit firm, or as any person who's having their business, and you are ACCA qualified or a member, you should have certain policies and procedures in your company to make sure that you detect people who are doing money laundering, and you don't take such clients on board who might be involved in money laundering, right? And then you should keep on monitoring your internal controls placed on this particular area. So this is what ACCA tells you about money laundering. Are we clear on it? Yes. Are we all clear on it? Come on. Next was laws and regulation. KYC is know your client. Laws and regulation. Let's come there. Okay. So what are the auditor's responsibility regarding NOCLAR? So what is NOCLAR? That's basically non-compliance with laws and regulations. So now what are auditors' responsibility regarding NOCLAR? Hmm. See, first of all, management has the primary responsibility for compliance with laws and regulation. If this question comes to you for like a 5 or 6 marker directly, this is what you will write. That first of all, management has the primary responsibility, not the auditor. But auditor does have some responsibility. So auditor is just responsible for the compliance of laws and regulation which directly affect the financial statement, which affect the financial statement, not directly, but which affect the financial statement. Auditor has some responsibility for that. What is the auditor's responsibility? That first of all, as per ISA 315, auditor needs to understand the laws applicable in a particular industry. So auditor need to first understand that my client is from this particular industry and these are the laws applicable. So how can he understand it? Maybe he can do pestle analysis, right? As per ISA 315. Now, if during the audit, if a non-compliance is actually suspected or identified. So if a NOCLAR is identified or suspected, if NOCLAR is identified or suspected, then the auditor is supposed to gather evidence, is supposed to gather evidence regarding the nature and circumstances of the event and the and the effect of it on financial statements. So now if no non-compliance is suspected, by, the client has done some non-compliance, maybe they've not followed a particular rule. Auditor will gather evidence that why did this happen, under what circumstances, and how does that impact the financial statement. Like, will you pay any fine for it? Will you pay any penalty for it? Will you suffer any uncertainty regarding going concern because of it? All of that. Then you might, as an auditor, wonder that should I report it to someone? So whom to report non-compliance with laws and regulation? So I can report it to TCWG, those charged with governance, because maybe the non-compliance was unintentional. They don't know they have done a non-compliance. So I will first tell TCWG. Then I might consider disclosing it to third party. I might consider disclosing it to third party if it is in public interest. For example, you have done some fraud and you're doing a fraud with the shareholders. So you might, as an auditor, you might have to disclose it to public, because people are investing money in this company and this money is a fraud. This company is a fraud. Now, before disclosing to a third party, is it easy for the auditor to breach his confidentiality? So, what should the auditor do if he is breaching his confidentiality? Very good. Legal advice. So, he can consider getting a legal advice for the same. Now, there are two kinds of laws and regulation. Number one, which directly impact the financial statement. Can you give me some example for it? Laws and regulation which directly impact the financial statement. Tax law, pension law, very good. Companies Act, yes. And any law which indirectly impacts the financial statement. Environmental laws, very good. Labor law. So the laws which directly impact the financial statement, auditor has to gather sufficient and appropriate audit evidence regarding their compliance. So auditor has to make sure that the company or the client is complying with those laws. He will not just become active when he sees a NOCLAR. He will have to, from the beginning only, even if they are complied with, he needs to collect an evidence that yes, they are being complied with. For example, tax laws. And the laws which indirectly impact financial statements, for them, what is the auditor supposed to do? He will just maintain professional skepticism. Correct? He'll just maintain professional skepticism, so that if there's any fraud or if there's any non-compliance suspected, he's aware of it and he can act upon it. Not that even if there's no non-compliance or a sign of non-compliance, then also he's on his toes. No. For the second category of laws and regulations, the auditor can have a little bit of rest. That's it. Do we understand this? Come on. Do we understand this? All of us? Hmm. What are auditors' responsibilities regarding fraud? Is auditor having any primary responsibility? Is he liable to detect fraud? No, the primary responsibility of detection of fraud and avoidance of fraud lies with the management and not the auditor. So let us write our direct theory answer for who's responsible for fraud. So basically, what are the auditor's responsibility for fraud? Responsibilities for fraud. First of all, let's understand what are the types of fraud we have. Number one is window dressing or fraudulent reporting. So, fraudulent reporting, that's basically window dressing, right? Where you maybe pass an incorrect journal entry, you overstate your assets, or you have some ghost employees to which you're paying salaries. So, you're passing bogus entries, right? Then there is misappropriation of assets. That's also a fraud. Misappropriation of assets. That's basically theft of asset. For example, someone has given you a computer for business purpose and you keep it for your personal use. So that's basically like theft of business assets. Of business assets or misuse of it. Correct? So now what is the management's responsibility? We have to mention that management has the primary responsibility for fraud as well. So management has the primary responsibility. Management has the primary responsibility for prevention and detection of fraud. Second, auditor in all good circumstances might not be able to detect the fraud even if he works to his best possible capacity, because the nature of fraud is such, because the nature of fraud is such that the preparator of fraud wants to conceal it. This is exactly what you can type in your direct answer. Because we are just telling them that it is not possible for the auditor to also be on his toes and detect fraud, because fraud is something which was done with the purpose of hiding it. Auditor is seeing whether there are material misstatements or not, but he is not an investigator. He's not a person who will detect the fraud as well. For that, we have forensic accounting, forensic investigation. So, uh, that's one thing. And even if we collect the evidence for fraud, there will be never a clear cut evidence that, okay, this person has committed fraud or this was the fraud being conducted. So, usually, the evidence, the auditor might even gather is persuasive in nature and not conclusive. That basically means it suggests something, it is suggestive, but it is not a final evidence. So, evidence might suggest that yes, fraud was conducted by Mr. A, but it is just persuasive, it's just suggesting that. We can't conclude on the basis of it. Then, further, when auditor is doing audit, he does not do audit on 100% of the data or 100% of the controls. He does use sampling, right? So, auditor does not perform procedures on 100% of the areas, on 100% of the areas, as substantive procedures are performed on material heads. On material heads, that too many times, that too generally, the auditor uses sampling method in most of the circumstances or in most of the cases. Thus, fraud can go unnoticed from the auditor. Then next, what can auditor do? Till now, I've told them that first of all, fraud is not auditor's responsibility. Then I'm telling them that anyway, fraud has such a nature that it's difficult for auditor to, you know, find out or figure out fraud. And then its evidence is also persuasive and not conclusive. And even if we perform our procedures, we are using samples and we are not doing 100% of the testing. So now we can say all that auditor can do, all that auditor can do for detection of fraud is to maintain or to be professionally skeptical. To be professionally skeptical and to keep the inquiries with the management going on regarding any contradictory evidence. So if there's evidence suggesting that assets have increased and other evidence suggests that assets have decreased. So these are contradictory evidences, right? Where the auditor should be skeptical regarding any contradictory evidence or unusual transaction. Hmm. Correct? And if further management is involved in the fraud, just imagine how can auditor do anything. Also, if management is involved in fraud, it further becomes impossible, almost impossible, for the auditor to detect fraud. Then, auditor, however, Auditor, however, is responsible to identify risks of material misstatement because of fraud. So if auditor has lacked his duty of care to perform substantive testing on a risky area, on a risky area, then yes, up to some extent, auditor could be held responsible. So these are the only areas where you can hold auditor responsible because as per audit standards, we are supposed to, as auditors, identify risky areas due to error or fraud, where there can be misstatement due to error or fraud. So if you have not done proper work on a risky area, then you are liable, otherwise you're not. So this is auditor's responsibility regarding fraud. This is the content that you can write. Direct theory question. Today we are discussing almost every direct theory question. Do we understand it? I mean persuasive. Pervasive is something different in reporting. Okay. Now, when I say auditor can be held responsible, there is something known as auditor's liability. Do you know about that? There are two types of liability. Can you name the two types of liability? Civil and criminal. Should auditor be held responsible under the criminal liability in any case? No. Criminal liability is for criminals, which are like basically murderers or maybe all of those crimes, right? Now comes the civil liability. Let us understand civil liability. We'll discuss or revise civil liability. When the question is, when does auditor's liability arise? Bracket, we are talking about civil liability here. See, for auditor to be held responsible for anything, responsible for any fraud, NOCLAR, etc., following three things should be met. Like following three things, all of the three. Number one, duty of care must have been or must exist between client and auditor. Now, when are you responsible? Let's suppose you're working on a bus stand and a child of 3 years is kidnapped. Are you responsible for it? You are not having a duty of care. You did not bring the child along with you, right? You were just passing by and you see that a child, parents are looking for the child, and you feel sad, but you don't have a duty of care. Second circumstance, there was a child all alone on the road, and someone kidnapped the child in front of you. Did you have a duty of care? Did we have a duty of care? No? Oh my God. No duty of care. Of course, there is a duty of care. You have to report the crime. You're not supposed to run behind the kidnapper and catch him if you're not that fit and etc. So maybe you can just report the crime, right? As a human, as a citizen, not human, as a citizen of your respective country, it's your duty. So, duty of care must exist. That's the first thing. So, duty of care exists between a client and an auditor only if they have worked together. Somehow they have worked together, right? Then there should be a breach of duty of care. So, imagine you reported the crime, still people say you are responsible for the kidnapping. You'll be like, wow, first I did a good job and then I am being blamed also. So, second is there should be a breach of duty of care, which should be proven. How did the breach happen? And that should have led to a financial loss which can be quantified. Financial loss which can be quantified, right? These are the three things which should be there. Then only auditor can be held responsible. Do we understand this? Duty of care must exist, breach of duty of care, financial loss which can be quantified. Breach of care. Kruti, for example, you did bad quality audit or you were involved in fraud with the client. That's a breach of duty of care. Yeah. Can you give me some ways how auditor can limit his liability so that later on he's never sued? Because this job has a lot of responsibility. So there are certain ways through which we can limit auditors' liability, right? And this can be asked as once again a direct theory question. First of all, you should not accept such a client which in future can trouble you or can do a fraud. So question is how to limit auditor's liability. That's the question. Number one, acceptance procedures. So my acceptance procedure should be very strong so that I do not onboard such a client who can further create a problem for me. Second, I should keep proper documentation. That means I should enhance my record keeping for like more than 5 years. Then there can be a disclaimer of liability in the audit report. What is disclaimer of liability? That this is the liability of auditor, nothing beyond this. So there's a concept known as expectation gap. Some people think that auditor is father of the company, auditor will take care of everything. If the control is not working, it's auditor's responsibility. If there's a fraud, it's auditor's responsibility. So with mention of auditor's responsibility in the audit report fills the expectation gap. Then we can cap the financial loss that auditor will bear. So we can cap auditor's liability, cap the financial loss, that basically how much will the auditor bear in case he is held responsible. Auditor can do a limited liability partnership and make sure he adds everything in the engagement letter. All of this. This is basically how auditor can limit the liability, plus of course by doing a quality audit. If the auditor does not compromise on his quality of work, most probably nobody can question or can hold him responsible. Correct? So these are the basic things which we have. So if we check our syllabus PDF over here, the one page, out of this, we've done money laundering, we've done laws and regulation, we've done fraud, we've done professional liability. Let us do code of ethics. Correct? Let's move to code of ethics. Okay. There are 5 principles of ethical principles given under ACCA code. PICOP. First is professional behavior, which basically means that you're not bringing disrepute to the profession, not bringing disrepute to the profession. Then you have integrity, which is basically being straightforward and honest. So integrity is being straightforward and honest as an auditor. Then confidentiality. That's basically like if you don't leak out sensitive information. So confidentiality is duty of confiding the duty of confiding the sensitive information received as part of business relationship without, or you can say not leaking the information mm, without prior permission, or in public interest. So you can breach your duty of confidentiality only if it is required for public or by law. Correct? Then objectivity. Objectivity is basically being fair, unbiased. That's being fair and unbiased. Then you have professional competence and due care. That's basically application of knowledge, training, and experience, right? And if you are applying the IFRS incorrectly, that means you are not having the knowledge, training, and experience. So, as a safeguard, we generally suggest that this person should go through continued professional development, or he should get some training. He should update his knowledge regarding this area. So, these are the 5 basic principles of ethics which could be breached in the case study of AAA. Then we also have threats to ethics. And how do you answer in the exam? Let's discuss that. So, what are the threats to the ethics? Threats to ethics and strategy to answer in exam. Hmm. First threat is self-interest. Can you tell me what is self-interest? Self-interest is basically your own financial interest, right? For example, if you have shares in your own client, you'll be very much interested that their profits maximize, because at the end of the day, you are the shareholder as well. Then, for example, if the client offers you certain favors, financial favors, or the client offers you certain gifts, that is self-interest. So, how do you answer these ethical threat questions in the exam? They will be there for sure. So, first of all, I have to tell them which threat is being faced. So, I'll comment on the threat which is being faced. I need to first identify it. Then I have to tell them that why is it a threat? At the first place, why is it a threat? Then I will talk about the significance of the threat. For example, if the threat is faced by the engagement partner is being offered certain gifts. So the significance of the threat increases because, of course, he is at the higher level. right? So that increases the significance. Then, if the company is listed, that also further increases the significance of the threat. Then, I will talk about the safeguards. How can I reduce the threat to an acceptably lower level? Correct? This is how I'm going to answer the question in my exam. First, identify and define the threat. Then, tell them why is it a threat in this case. Then, talk about the significance and then give them the safeguard. So, the first kind of threat we have is self interest, where basically we talk about there's a financial interest vested. Okay. Then we have self review, where maybe you have done some work and then as a auditor you are reviewing that work of yours. So that's basically checking your own work. Hmm. Then familiarity threat is there, where basically if you have some long association, personal relationships, or close relationship with your client, you will be too favoring them, like you'll be bending to their need because you know them. So long association, personal or close relationships. Correct. Then intimidation threat. As an auditor you might feel pressurized, like for example, complete the audit in 10 days, complete the audit in 1 week, or just charge this much fee. So it can be an actual pressure or perceived pressure. That's what intimidation threat is, actual or perceived pressure. Then management threat, that's basically getting into the shoes of the management. Hmm. Getting into the shoes of management. Then advocacy threat, where you promote your client's interest. Can you give me an example where you promote your client's interest? Advocacy threat, when we accompany our client for a bank loan meeting, right? And then the bank might think that we are here to guarantee their solvency, and they might wonder that we are the guarantors. And in that situation we might end up getting involved in things like this, where if the person actually defaults on the payment, we might be requested to pay on their behalf. So advocacy threat is when you act on the or you promote the interests of your client. Are we clear on this? Okay. Let's talk about certain important scenarios in ethics. Have you guys seen that table in your notes where there is one side I've given you the the situation, and then they've analyzed the situation and then they've given the safeguard. You've done that table? It's very important. Revise it as many times as possible because that is going to help you a lot. It's like 5 to 6 pages, I guess. So do that. Okay. So let's have some just cherry picked situations here. For example, gifts. So some important situations. Hmm. Some important scenarios. Number one, gifts and hospitality. So, as an auditor, when you receive gifts and hospitality, first you have to see whether they are trivial or not. See, if they're trivial, you can accept. Otherwise, you have to see what is the nature, value, and intent. And because it gives rise to self interest threat, you have to politely decline it. Right? Then sometimes there is a fee dependence issue. There's an issue of fee dependence. What is the rule for fee dependence? For listed clients, so if from one audit client I am getting for 2 consecutive years a fee of more than 15% or more of total revenue, then this gives me self interest plus intimidation threat. I'll be intimidated by that person who gives me 15% of my business. So for 2 consecutive years, for 2 consecutive years, the fee from one client is 15% or more of total revenue. This can give rise to self interest slash intimidation threat. And the safeguard for it would be, what would be the safeguard for it? First, I'll talk to TCWG that this is happening with me. I'm charging you this much fee and I'm depending on you a lot. Let them know. Then reduce the fee dependence. Maybe you are providing them some extra services, additional services. Stop providing them so as to reduce the fee dependence. Get a quality control review done. Yes. Then another very famous kind of situation is non-assurance services. Hmm. Provision of non-assurance services. As per the code of ethics for listed clients, what all services are prohibited? That auditor cannot provide these services. Can you tell me? What are the services which are strictly prohibited? Mhm. So basically, any service which is related to financial statement. For example, IT systems around financial statements. Valuation services, because that thing goes into financial statement. Internal controls related to financial reporting. So basically, for listed clients, companies, all services related to financial statements like bookkeeping, tax calculation, valuation, etc., are prohibited, right? Only advisory services are allowed. And for unlisted clients, you can give the services, any kind of services, but with safeguards. So in unlisted clients, you can even give the bookkeeping services, but with safeguards. That's it. Do we understand this? Are we clear on this? Generally, they ask you many questions regarding this in the exam. Yeah, in unlisted companies as well, you should not assume management responsibility, that's sure. Yes, Joan, you can prepare financial statements for the unlisted companies with safeguards, like for example, separate teams, quality control review. Separate teams and quality control review. Okay. Aswant, if you're dependent on fee for someone, you will have a perceived pressure. You don't want to lose that client. Understand my point of view. You don't want to lose that point. And that person is giving you 15% of your revenue. And that person says, our profit is this, agree to it, or we will fire you. You'll be very afraid to lose that person. That's why intimidation. Actual pressure is I threaten you, perceived pressure is you think in your head that you're being pressurized. For example, let's suppose there's a principal of your school. He was always a intimidating person, but now you're a grown up adult, and that principal of school started his own business. He's a very kind guy now, and that person comes to you as your audit client. Now you have a image of him that yeah, he was my principal. So you will have a perceived pressure only. He's not doing anything. He's just existing and breathing. But still you are like feeling pressurized in his presence. That is perceived pressure. Actual pressure is when someone actually threatens you, right? Advisory services can be regarding anything. Advice regarding internal control deficiency, advice regarding expansion, merger, acquisition. It can be for anything. Okay, right. Next topic that we are going to do is 8 elements of quality management. That's what I told you. We will actually learn. That's very important. Okay. Yes, business development advice could be there. So the next topic is quality management, 8 elements. So basically, here the question will be what is ISQM1? That is standard on quality management. So this is what we are going to start after 5 to 7 minutes of break. I'm having a bad throat. So I'll just take a small break for some water. You guys can also have it. And then we'll continue with ISQM 1. 8 elements of ISQM 1. So 5 to 7 minutes, 7 minutes of break. Okay. See you around. Yes, guys. I hope my voice is audible to you. Let's resume. Okay. So, what is ISQM1 and how is it tested in AAA? Have you guys seen those kind of questions where they ask you identify and comment on the ethical and professional issues? We've seen these requirements. Did you ever realize that those are from quality management as well? Like ethics, we know it's ethical issues, but the professional issues that we talk about, sometimes they write quality also. What are the quality issues here? That is quality management. So, what is quality management actually? Basically, where auditor has done something, let's suppose he has not held a planning meeting. So, what we will say that if the auditor does not hold a planning meeting, what happens because of that? The audit is not good. That will be a poor answer. So, let's suppose let's assume that in the case study, it is written, it's a very important topic, so please pay attention. Let's suppose in the case study, it is written that uh, auditor did not hold planning meeting at the initial stage of audit. Now, this is the line that they have subtly kept in the exhibit 1. Now, if you are supposed to comment on the quality of audit here, there are two answers to it. Someone can say this reflects poor quality audit. How many of you think this is what you would have written? Just picked up a sentence from the case study and written that this reflects poor quality audit. You could have written this. Most of us would have written this, especially in the time pressure. This is hypothetical, Manan. There is no case study here. Okay. But do you think it is a qualitative answer? No. So, what is a qualitative answer is the question. The qualitative answer is where I tell them this is bad answer. Good answer would be, good answer would be the planning. First, I will tell them that why planning meeting is important. Then I will say what happens if it was not conducted. And then I will conclude that it is poor quality. So I will say the planning meeting of audit sets the scope, direction, and timing of audit. Duties are segregated. Client Clients' risky areas are identified and discussed. Risky areas are identified and discussed. Correct? This is what we do in the planning meeting. Because here the planning meeting didn't happen. I'm writing in short form. Did not happen. It suggests that the audit audit must have been directionless because the scope because the uh, direction was initially not set. The audit team would have been clueless about Which work is to be performed by whom? Is to be performed by whom? Overall, this will lead to detection threat or detection risk because of poor quality audit. Can you see? I have two ways to write answer in my exam. The one sentence here, okay, some people might think I cannot think above this. And they'll be like, I lack information, I lack knowledge, I lack what to write in the paper, I don't have content to write in the paper. And then one student can give such an answer as well. And then they'll be like, ma'am, where did you get this information from? Which part we should refer to? This is general knowledge. When you were doing your audit risk theory, the basic audit risk theory, did you not read about what is the importance of planning of audit? What happens in planning, meeting, scope, direction, and timing only? I still remember I gave it STD, right? So I just referred to some basic things and I made sense out of it that this is what planning meeting is for. And if it is not conducted, this is what it will lead to. That means people will be clueless, audit will be directionless, and there will be detection risk. And then finally, a small mention about poor quality audit. Do you understand the difference of how you have to answer your questions? This gives you professional marks. Okay. Now that is application part of quality management. Now there are some direct theory questions which can be asked from ISQM1. I'm doing the mostly asked, frequently asked direct theory questions of ISQM1. That is elements of ISQM1. So first I need to understand why was quality management standard needed? Why we need a standardized quality of audit? That's the question. So let's answer it. What is ISQM1? So audit is based on judgments. You all know that audit is based on judgment and application of professional skepticism. Correct? It is based on judgment and application of professional skepticism. And it's not basically like, tick the box approach. Judgment is also something which is variable, which is different from person to person, subjective. Skepticism is also something which is not a fact, it is like a quality and attitude. So it's a very human behavior or nature. So it is not a tick the box approach. Correct? The application of judgment, the application of judgment and skepticism across the variety of clients is relative. That means what you apply to client 1 might not be same to client 2. So to maintain, hmm, so to maintain the quality of audit at all times, ISQM1 suggests ISQM1 suggests a system of quality management which is tailored, which is tailored to client, which is tailored to client and its firm base. So basically, as per ISQM1, we are given a system using which, you know, a system using which the auditor can ensure that every client's audit is qualitative. That these are the bare minimum things which must be there to maintain the basic level of quality. What are these system of quality management? Number one, these are the 8 elements that you have to mug up, cram. Number one, firm's risk assessment process. Firm's risk assessment process. What does that mean? The firm, by firm I mean audit client, audit firm. The audit firm must design and implement a process to identify risk. What does that mean? Why? The firm must consider its size, environment, specific situation, networks, and external service providers. Why will the audit firm consider this? Because imagine you take on 20 clients and your staff falls like short. So that is also a quality problem, right? So before you take anyone on board, and in general also, have your own risk assessment process. You always suggest the clients to have a risk assessment process, but also have one for yourself. So this risk assessment should consider your size of the firm, your environment, the specific situation, everything. So this risk assessment process is ongoing and not one off. It's not once, it's ongoing to keep track of ever changing situations. To keep track of ever changing situations. So it's not just one time. You have to keep on altering them and updating them. Second is governance and leadership. Now, you are an auditor, you have to maintain the culture of your firm. If your engagement partner thinks that the most important thing to him is that the client is happy and he doesn't leave us, then everyone in the audit team will have this mindset and they will not offend the client. But as an auditor, you're supposed to offend the client, call him out whenever he's wrong. Correct? So you have to set the culture or you have to set the tone at the top. So governance and leadership is very important. Governance and leadership. So here you can say firms should demonstrate, firms should demonstrate a commitment to quality, commitment to quality through its culture, through its culture, and recognize its role in serving public interest. So the culture at the top should be like What is most important to us? Quality of our work, and that we maintain our ethics. So the CEO, the chairman of the audit firm, they are the people who set the tone at the top. Yes, should focus on quality of audit rather than focusing on client retention or engagement profit. So, the CEO or the chairman should focus on quality of audit rather than focusing on client retention or engagement profit. As a consequence, hmm, as a consequence, engagement partners will confidently challenge the client's judgment. Because if everyone is empowered that, we care about ethics, we care about quality, then even the junior most audit team member will be able to boldly face the client. Hmm. Right? So that's one of a very important principle to be kept in mind for qualitative audit. Then relevant ethical requirements should be met. Ethical requirements. So we should train the employees regarding the code of ethics, our own employees. I'm talking about audit firm. So train the employees in firm regarding code of ethics. Then we should make sure that all people who are with us, for example, external service provider, for example, your component auditor, we should make sure that they are also complying with the code of ethics, right? So we will work with such people only who are ethical. Then ethics is not just the code of ethics given by ACCA. It can be based on a country as well. So every country will have a different code of ethic, right? And then we can say ethical issues can also lead to quality issues. Because if you have ethical threat, that's when you will deteriorate the quality of audit as well. So these two are interrelated things. That's why we have a requirement in the question which says comment on ethical and quality issues. Then when we accept a client or we continue any client relationship, there's a point regarding that as well. Acceptance and continuance of client. So when I onboard any client, I have to assess their integrity and ethical values. So I need to assess integrity and ethical values of client and its management, right? So for example, if they say that the client was involved in drug trafficking or human trafficking, so you have to assess all of that. You have to do the background check and everything. Otherwise you will onboard clients which are bad. That's also a lack of quality, right? Because you are not good in assessment of people. Then we should also think that are we capable of doing audit of this client? So we should think about audit firms ability to perform engagement. So do we have the related knowledge, training and experience in this area? That's a huge question to be asked. So do we have the knowledge, training, and experience in this area. Will we be able to comply with ethics if we take on this client? Will we be able to comply with ethics if we take over this client? Why? Because sometimes you are already providing a service to them. Let's suppose bookkeeping. I cannot provide audit services to them because then ethic will not be met, ethical code will not be met. So I have to consider all these things before I accept or continue a client. Then engagement performance. Now, when I'm doing the audit, when I perform the audit, engagement, hmm, performance, I need to ensure good quality audit. I need to ensure good quality audit. How? I have to make sure, please listen, this one is very carefully, very important point. How can I ensure a good quality audit? How do you know that an audit was good quality? If it had direction, direction is given by planning of the audit, supervision. So sometimes in the audit case study, you will see that there was no supervision, there was no senior. Junior members were doing the audit amongst themselves. There was no one to review. Consultation, whenever required, you have taken the help of some expert. Then review. You need the review at each stage. It's not just at the end. At each stage, someone should come and review the working papers. So, the review should be done by the seniors. And resolution of disputes, as in when they arise. Resolution of disputes. So this is basically which during the audit, this is how you maintain the quality of audit. So you can give various examples. Let's suppose in the case study, they have said that audit is done in less time. What does that suggest? It suggests we have cut the corners of our work somewhere. Maybe we have ignored some risky areas and not done substantive testing, which might suggest there are a lot of misstatements which have gone unnoticed, which suggest poor quality audit. Hmm. Maybe they have written in the case study that no test of controls have been done. So you'll say test of controls are very significant part of audit because they tell us that whether entity has a robust way of avoiding misstatements because of error or fraud or not. Now, if test of controls are not done, there is a possibility that we will over rely on the controls. And there will be so many deficiencies in the internal control which will not be noticed. Again, which will lead to detection risk, which will lead to poor quality of audit. So this is how this point is applicable, right? Okay. Then comes the sixth point, human resources. That's basically, as an audit firm, you should have resources in timely manner. Like you should have appropriate level of people for the appropriate task. So we should have resources available in timely manner. Resources available in timely manner. Then employees with required knowledge, training, and experience should be there. Then sufficient level of seniority, uh, employed for complex area. For example, let's suppose in the case study they've written that the intern has performed audit of financial instruments or hedging. So your answer will say that hedging is a very inherently risky area and it has a lot of complexities involved and judgments, which requires next level of experience. And the intern is inexperienced. He's not even fully qualified. So he lacks knowledge, training, and experience. And he's a misfit for this job, because of which he could have made fundamental mistakes in his work, which could lead to detection risk and therefore poor quality audit. Right? So that's what we mean by human resource. Then we have communication and information. Seventh is communication and information. That's basically that we should keep on communicating with TCWG, with the client on regular basis. So the write-up that you can give as it is this includes obtaining, hmm, generating, and using information, and using information, and communicating the information within the firm. For example, communicating policies to the personnel, communication of information obtained during audit, communication of information obtained during audit with an engagement, quality reviewer, or communication with component auditors or outgoing auditor, whatever it is. Point is, you have to keep on maintaining your communication. So you can also say communication to TCWG. So it's as a good quality audit, you should make sure that you're communicating amongst your team, amongst the people who are helping your team, or your client, or your TCWG, or to third party whenever necessary. And then lastly, monitoring. Monitoring is a constant point in almost every topic. Whatever the above suggestion is, keep on monitoring that these are working effectively or not. And that should be ongoing monitoring. That's it. So these are the eight quality management elements. Number one, risk assessment procedure, governance, ethics, acceptance, engagement performance, human resources, communication, and monitoring. So you can make some mnemonic out of it and just mug these 8 points up. Do we understand this? All of you? Yes, this doc will be available. Okay. Now we cannot do something regarding like procedures and evidence, but we can just have a quick look at the strategy on how to write audit risk, how to write uh, procedures, and how to write evidence, right? And then we can move to review and reporting. Okay. Whatever I'm writing in the class today, you will get a handout of it. How to write good answer for audit risk or ROMM, risk of material misstatement. Can you tell me the way we have to write answers? If you get audit risk question, what is the performa that you have to follow? MTR, materiality, treatment, risk. Very good. MTR. So how to write good audit risk? You need to first understand there are two risks: risk of material misstatement, which includes inherent risk, and control risk. Then there is audit risk, which includes inherent risk, control risk, and detection risk. Then you should know how to base your materiality. So in question number one, generally they tell you that on what basis are you keeping your materiality? Is it revenue, PBT, or total assets? Then you have to make a separate heading of materiality and tell whether you are keeping it on the lower end or are you keeping it on the higher end. So if after reading the case study you feel that this question had low risk, you'll keep the materiality on higher side. If you think that this company has high risk, then you keep the materiality on the lower side. Correct? This is what we do for materiality. And then we justify that why do you think this is high risk or low risk. For example, if a client is new to us, so generally it is a high risk client because we don't know anything about that client, right? So generally that is a high risk client. Then sometimes a client is, expanding. For example, they might be entering into some kind of consolidation or some kind of merger and acquisitions. So there also you can say it's a risky year for them. So you have to assess whether it is a risky client or not and then base your materiality. Then you have to write, first of all, for every audit risk, you have to first comment whether it is material or not based on the threshold that you have decided. Then you have to talk about the treatment from the relevant IFRS. Just state it as it is. Then talk about what they have done wrong here or what they could have done wrong. That means talk about the risk. This is how you write your audit risk answers. Then how do you write your procedures? How to write procedures? How do we write the procedures? Hmm. Procedures are generally, you know, words or verbs that auditors do to check assertions. What are assertions? Assertions are promises made by the management. So auditor needs to see whether the promises made by the management are true or not. Now, what are the promises made by the management for P&L items? Management is giving you a statement of profit and loss, and management is promising you that all these incomes and losses have occurred. So their occurrence is the promise. Their correct classification is a promise. Their correct cutoff is a promise. Then their completeness is a promise. Their completeness is a promise. Then accuracy is a promise. Their presentation is a promise. So all these are promises made by the management. And for the balance sheet, SFP, what are the promises? the rights and obligations that whatever asset or liability is recorded, we have rights and obligation for it. Then their existence, their valuation, their accuracy, and their classification. So to test these assertions, we can perform certain procedures. How do you make the procedure? You first talk about what work the auditor should do. So verb, for example, obtain, assess, inquire, inspect. On what item are you doing that work? So what is the document or what is the event that we are referring to? And why are we doing it? Like which assertion are we testing? These are the three things which should be there in a good procedure. Example, recalculate depreciation of non-current assets to ensure mathematical accuracy. Correct? This is a good procedure. So that's how you make good procedures. Then how do you write good evidence? In evidence, it's almost same, just that instead of the verb, you now talk about what evidence you have. So if I say recalculate depreciation, its evidence will be copy of working paper on which recalculation was performed. Then procedure can be obtain board minutes. Its evidence will be copy of board minutes. Procedure can be inspect the site for existence of asset. Its evidence will be photographic evidence of the site to ensure the existence of the asset. So that's how you write procedures and evidences. These carries a lot of marks in your AAA paper. So make sure you write good procedures and good evidences. Correct? Are we clear on this? Okay. Procedures related to data analytics, there's no certain procedure. I think we have done one such question in Super 20 as well. I don't know if you have done that question or not. Data analytics is more like analysis that you perform. Yeah, that question is also part of your Super 20. It's like analysis that you perform using computer assisted audit technique. So the procedures that we perform is okay, procedures that we perform uh could be like same, because data analytics will help you with like something from the computer, a sheet will be taken out, and you can, for example, um let's take an example, Harita, here. TG professionals, okay? So we have a lot of students from various countries. Now I have to use data analytics here. What I can do is, using data analytics, I will take help of AI, or I'll take help of computer or technology to segregate data for me. That how many students are from India. So one way is manually, taking out and calculating how many students are from India and how many students are from, let's suppose, Pakistan. How many students are there from Dubai? How many students are there from London? So to get all that data, I can ask my computer or technology that you analyze for me. They can in fact make a pie chart out of it, that this much percentage is from here, this much percentage is from here. So these are the procedures that you can perform. So these are analysis. Data analytics is used for analysis at the end of the day. So you can analyze trends. You can analyze your, uh, you know, the ratios through data analytics. You can segregate the data with the help of data analytics. You can use, something which is scattered, some data which if you would have done it by yourself, you would have been messed up. You can use data analytic tools for that. Then the data analytics tools can also tell you about, okay, what are the unusual trends, what are some uh some, you can say, unusual thing that has happened. For example, uh the costs have increased but the profits have actually also increased. So the revenue is falling, the costs are increasing, but the profit is still increasing. Or there can be some more such trends based on the case study. Of course, we can't hypothetically imagine everything. So based on the case study, there can be various things which can be analyzed through data analytics. So you can use data analytics for your procedures as well, right? For due diligence, what is due diligence? It's like when you are, a company hires you, that we are wanting to buy a company, a target company. So to help us to understand their standing, what is the value of their assets. So procedures that you perform to take out value of any company will be the procedures for due diligence. So you can't list out. The way you write procedures is this. This is a very vast topic. It can't be done in a day, right? So we are doing direct theory questions. These are application questions. These are case study specific questions. I hope you understand now. I'm telling you a basic strategy on how to write procedures. For due diligence also, you will write this way only. There you might just, skip on talking about assertions, because there we are not testing assertions. The assertion there is valuation of assets only. But you will write the procedures in this way only, that recalculate, analyze, inquire, inspect, all of that. Okay. We have went a lot of out of track. Let's stick to what we were doing. Okay. What do you want to talk about cryptocurrency, Reem? Cryptocurrency is part of your SBR as well. I hope you have done it there. Okay. Getting back to track. This is how we write procedures and evidences. Now comes another direct theory question. Uh, Relying on work of others. Now, what are these other people? First, let's consider relying on work of component auditors. So, how to rely on work of component auditor? Who's a component auditor? Auditor of the subsidiary. So, first I have to see whether the component is material or not. So, I have to see if the component is material slash significant or not. That's my first step. Now, it can be material by nature, okay? It can be material because of the fact that its assets or its revenue is 15% or higher of total group assets. So, this 15% is the threshold used for components. Now, if it is a significant component, if it is a significant component, what are you supposed to do? We are supposed to do full audit of financial statements. We means group auditor will do full audit of financial statements using component materiality. Make sure you remember that. Or we can perform specific audit procedures on risk of material misstatement or we will only do audit of specific, we will only do audit of specific account balance, transaction, or disclosure, right? And I'll make sure that I check that the component auditor has competence. That means he's ACCA qualified, he follows code of ethics, right? Then he's independent. Then I will also check their internal control, then their quality control measures. I'll check all of that and then decide whether I want to rely on the component auditor or not. Then how do you rely on the work of internal auditor? How to rely on work of internal auditor? That's the question. So I will first check status of auditor in the organization, that whether he's independent or not. So I'll first check whether the internal auditor is independent or not. Like, is he reporting to audit committee or is he reporting to the management only? Then I will see his approach. How does he approach the internal control? Is he ACCA qualified? Is he component? He is competent. Then uh, I will see whether the quality control measures on his work are nice or not. Then I also sometimes rely on the work of service organization. So as an auditor, how to rely on work of service organization, that is basically outsourcing firm. So first of all, I need to see what work has been outsourced and what is the materiality. So materiality of the work outsourced. So let's suppose the work is only insignificant and I don't care much about the service organization. Then I see, can I visit the service organization? Is this service organization accessible? So I check the accessibility. Then what kind of internal controls is this service organization having? For that, I can obtain type 1 or type 2 report. What is type 1 report? Type 1 report talks about how the internal controls of service organization are designed and implemented. Type 2 report, whereas talks about how the internal controls are designed, implemented, and whether what is their operating effectiveness. This is what we consider. Then we also consider whether what is the experience of the service organization. Again, do they comply with various rules and regulations or not? Then work done on opening balances. The auditor does some work on opening balances as well. Generally, it's a very direct question. I'm talking about direct questions. These are all direct questions. So the examiner can ask you, what work is done on opening balances? Simple. We first see whether they were brought forward correctly from the previous year. Then we, see whether we were consistent, like, accounting policies are consistently applied or not. Whether IFRS was applied to the opening balances correctly or not. Whether they are disclosed properly or not. All these things is what we consider. Do you understand these basic things? How to rely on work of component auditor, internal auditor, and service organization? Basic direct theory questions. Generally repeating points, even if you forget something there in the exam, repeating points which you should memorize. I need to check the competence of the person. their knowledge, training, experience. I need to see whether they comply with ethics, whether they are independent, whether their internal controls are good or not. And that's it. These are the things you write blindfoldedly and you get marks. Sorted? Okay. Now let's come to review and reporting. Can you tell me from the review part, I'll just consider the going concern part, okay? Before that, let's talk about audit report content. What is the name of your friend which defines the content report, like content of the audit report? Yes, the video will be available. Taub Kora read. Okay. So what is the content of audit report? Let's consider. Title. To whom are you addressing it? Then opinion. Basis for opinion. Then your other information paragraph. First you have CAM paragraph, key audit matter, other information paragraph, then responsibilities of management, then auditor's responsibility, then date, etc. Right? This is what the audit report looks like. Now there are various kinds of audit opinion which can be given. So this is revision. I hope you know what are the audit opinions. Number one, there is qualified audit opinion, which is basically except for, or you can call it as except for, or qualified audit opinion. When do you give this kind of audit opinion? If the material or if the misstatement is just material. So if there is a misstatement and it is just material, that's when I give qualified audit opinion. Second opinion that I give is adverse. When do I give adverse audit opinion? If the misstatement is material plus pervasive. Correct? And now the question arises, what is pervasive? Persuasive was different. Pervasive is different. So pervasive is when a misstatement is widespread in the financial statements, or when a misstatement or any misstatement uh, is a significant proportion is a significant proportion of the profit, revenue, or asset, right? Then when a disclosure is misstated which was fundamental to users understanding. So this is what we have as pervasive misstatement. If a misstatement is pervasive, that's when we give adverse opinion. When do we give disclaimer of opinion? Disclaimer is given when there is lack of evidence. So during the process of audit, you were not able to collect enough evidence related to that particular issue or misstatement. So that's when we give disclaimer that we didn't get the information. Right? Then what are the paragraphs that can be added? What goes into the CAM paragraph? See, before we move to CAM, we all know there are some matters that we communicate to TCWG. So what are the matters? What are the matters communicated to TCWG? See, we communicate to TCWG our responsibilities as auditors. So we communicate auditor responsibilities. We do communicate planned scope and timing of audit. Planned scope and timing of audit. Then we also communicate significant findings from the audit. So anything specific that we found in the process of audit, we communicate that. Then we also communicate in case auditor's independence was compromised in any situation. So we communicate about auditor's independence issues as well. Then we also communicate internal control deficiencies. And we also communicate recommendations to improve on those deficiencies. Now, out of these things, we pick up the most important things and we report it in the CAM paragraph. So what goes into the key audit matter? We take out issues. So issues out of those communicated to TCWG, which is considered, which are considered of highest importance, of highest importance, which are considered of highest importance, uh, and are highest risk areas, and are highest risk areas based on auditor's judgment. Based on auditor's judgment. Right? We don't repeat like whatever is there already there in, let's suppose, other information paragraph. We don't repeat that in CAM. That's what goes into CAM paragraph. Then what are the other paragraphs? We also tell in the CAM paragraph that why something is CAM and how it was dealt in the audit. That is also included. Then we have a paragraph known as emphasis of matter paragraph. There's something known as emphasis of matter paragraph. What is there? Here we draw the user's attention. This is used to draw the user's attention to something which is correctly disclosed in the financial statements. So it's a positive paragraph. It's not a mistake. It's not for a mistake. Something which was correctly disclosed in the financial statements, which we just draw users' attention to that. Where do you place emphasis of matter paragraph? Where do we place emphasis of matter paragraph? It is placed after can. If required, it is placed after can. Then what goes into other information paragraph, which is by default there in the audit report? This is like something apart from financial statements, like chairman statement, yes, CEO statement, where we mention auditor's responsibility regarding the other statement. Okay. So we mention auditor's responsibility regarding these statements. So a company just does not report the financial statement. It also comes up with various, like I would say, statements, or you can say press releases, some kind of plans, some kind of vision, objectives. Let's suppose it's written in Unilever's website that, okay, we'll do this. So whether they did that or not, whether they are correct in saying that or not, that is other information. So if there is the inconsistency in other information paragraph, then this other information paragraph moves from here to here in case of inconsistency. In case of inconsistency, right? Then we have other matter paragraph. Other matter paragraph is again a time pass paragraph where, for example, any other matter regarding financial statements that you want to discuss. For example, that previous year's financial statements were not audited. So that goes into other matter paragraph. Then finally, we have a paragraph known as MURGC. So let us talk about MURGC paragraph. For that, we need to understand that what are auditors' responsibility regarding going concern. So let's talk about going concern of a company. So as per IFRS, if there is uncertainty regarding going concern, what are you supposed to do? You're supposed to disclose it as per the IFRS. And if you are no more a going concern, what are you supposed to do as per IFRS? You have to use breakup value basis. That means you have to prepare your financial statements on the basis of breakup value, where you report your assets and liabilities at fair value less cost to sell. Correct? So hmm, that's one thing. Then now, if this was not correctly followed, if this was not correctly followed, let's suppose there was an uncertainty regarding going concern. There are two situations. Number one, when the disclosure was correctly given. Number two, when the disclosure was not correctly given. If the disclosure in the financial statements was correct, then I will not modify my opinion. So don't modify audit opinion because you have not done any mistake. But because there is a disclosure regarding uncertainty, so you can add MURGC paragraph, where again you will draw users' attention to the disclosure where it is disclosed that there is an uncertainty regarding going concern. So you will draw users' attention. You will draw users' attention to that disclosure or that particular disclosure note, okay, where it is disclosed that yes, there is uncertainty regarding going concern. Now, if you have not given that disclosure correctly, then of course you will modify your opinion and you will issue a qualified opinion. Correct? Makes sense? Then, what if you are no more a going concern? Here also you have two situations. If you are no more a going concern, situation number one, you've correctly disclosed it. That means you have correctly used breakup value basis and you have disclosed it. In that case, you want to draw the user's attention to this. So you will add this matter in emphasis of matter paragraph and you will give unmodified audit opinion. It's an important disclosure now that the financial statements are made in breakup value basis. Second situation is that you have not correctly disclosed it. That means you have not used breakup value basis. So it's a very pervasive misstatement because breakup value basis means all the assets and liabilities are kept at fair value less cost to sell. So all assets and liabilities are misstated. So it's a pervasive misstatement. So therefore, adverse audit opinion is issued. Are we clear on this? What happens in going concern? Yes. Clear? For MURGC, if going concern related disclosures made appropriately by management, then MURGC. Okay. Where do you keep your MURGC? What is the placement of MURGC? Before CAM. Very good. Now, assuming a situation where all the paragraphs were added, what will be the name of your friend? So first you will have title, addressee, opinion, then basis for opinion, then here other information paragraph, MURGC, CAM, emphasis of matter paragraph, then other matter paragraph, then other information if there is no inconsistency, then read. Right? This will become the name of your friend if all the paragraphs were to be discussed where they are placed. Do we understand this? So this is our reporting part, review and reporting part. So you can get a question you all know where you critically appraise an audit report. So there must have been wrong placement of a paragraph, incorrect language used, wrong heading used, incorrect opinion given. Something which was MURGC is given in CAM. Something which is CAM is given in emphasis. So that's what you have to figure out, pinpoint and comment on. Right? That's it. Now we also have other assignments, but other assignments are all application based. So that is not something we can consider as a direct theory question. So other assignments like due diligence, forensic, KPIs, all of that we've done as part of Super 20 questions. So they're more like, where you have to write procedures for some other assignment. Or you have to, generally for other assignments, your procedures include inquiry, inspection, not full-fledged procedures. You don't go and inspect something. You don't enter into the field. You just do it as an overview, right? So that's for other assignments, which I'm not considering for now. Now I'm going to consider your sustainability assurance. So there is a topic of sustainability assurance, okay? But before that, there are three terms that I want your answer on. Number one, what is transnational audit? What is transnational audit? Audit across borders. Yes, like I am in India, I'm auditing a company in some foreign country. Okay. Is it easy to do a transnational audit? What are the drawbacks of doing a transnational audit? Hmm. It's difficult to access it. It is costly. We are not aware about the language. We are not aware about the laws. The code of ethics can be different. The uh, various different laws and regulations. Yeah, maybe they don't follow IFRS even. Okay. What is joint audit? When two or more auditors they come together and they audit one single client. Can you give me positives and negatives of this? First, give me positives of joint audit. Yes, positives. Audit quality, lower workload, improves conflict of interest, okay, clashes. So the positive is reduce familiarity, threat, experience work. So generally, the positive will be that you will take less time, or I don't think less time, but more efficient. Okay, like more of the mistakes could be found. by two people rather than one person. And so high quality audit, right? Lower ethical threats, yes, all of that. And negatives will be that there will be clashes in the approach, conflicts of interest, and then just simply that duplication of work will be there, time consuming, costly, all of that. So there are more negatives, I believe, rather than positives. Correct? That's it. Okay. Coordination challenges, yes. So now you know how to stretch your answer. These are general theory answers. So there's nothing like you can't answer by your common sense. You have to just learn how to stretch the answer and how to enhance it. Okay. Are we ready to do the sustainable assurance? Are we all ready? I'm just taking it out on the ACCA website, the technical article. Hmm. Okay. IFRS 18, I've already made a video on it and posted on my YouTube. It's a YouTube live, you can check. And it is less relevant to AAA, okay? Here we go. This is the sustainability assurance engagements that we are talking about. So I'm just trying to. Okay. This is regarding ISA 5000, okay? And what it basically is, let me give you a brief of it. You all know about sustainable reporting from SPR? Yes, sustainable reporting, which IFRS S1 and S2 were introduced. Now, don't think that I need to know IFRS S1 and S2. No. The point is that people are now using IFRS S1 and S2. Accountants are using IFRS S1 S2. So, don't you need auditors with the knowledge of IFRS S1 and S2 as well? So, as per sustainable reporting, we are making sustainable reports where we are not just disclosing numbers, but we are disclosing various other aspects. What are the aspects that we are disclosing? our environmental footprint, our impact on society, our impact on the human resources, non renewable resources. So we are reporting so many things apart from just numbers. You guys will agree with me. In the whole audit subject, we've been talking about how auditors only deal with financial statements, correct? That's what we know. That, okay, audit risk means MTR. We have to, auditor has to be skeptical for error or fraud and misstatement. We've been talking about misstatement by the accountant in the balance sheet or the P&L or the cash flow. But what about the sustainable report, where balance sheet, P&L and everything will be a side, how do I say, will be a sidelined element, isn't it? Sustainable report is about your mission, objectives, environmental footprint, how are you going to improve it, how are you impacting the climate, what is your target, what is your strategy, what are the risks, what are the opportunities. So who is going to test whether whatever management is reporting in that report is correct, that is not materially misstated? Who will check it? Auditor only, na? Just for your just for your knowledge, from 2027 the subject of SBR is changing to business and sustainable reporting. So audit will also change very soon. So it is a new profession coming up. Now numbers are less. Sustainable report, okay, check whether they're saying right or not, that they have emitted this much carbon dioxide this year. You need to check that. You need to make sure that that figure is not materially misstated. So people will be interested in that more very soon in the future. And profits will come along. So to have that, we have this draft, exposure draft, because right now we don't have any standard on auditing of sustainable reporting, but we have an exposure draft. So here in this whole paragraph, they've explained that how, everyone is moving towards green credentials. I'm not going to read that out for you. You can read it. So here they've just in this paragraph explained that, okay, everyone is moving towards sustainable reporting and green credentials. Now sustainable reporting is becoming, you know, in many countries, it has become like, for example, in European Union, it has become compulsory to, that you have to report the sustainable element of your financial statements and not just balance sheet and P&L. This is also a commercial opportunity. How is it a commercial opportunity? How is it a commercial opportunity? If I tell you, that ACCA has maybe included, okay, you all know that ACCA has introduced a new paper, right? From 2027, which is on AI. Is it not a commercial opportunity for someone who knows that, and he could be a good teacher or she could be a good teacher for that? Is it? Well, yes. That will be a new, altogether a new subject. No competitors, nothing. So similarly, imagine there are so many commercial opportunities around you. For example, when a new society starts to, you can say, how do I say it in English? When new society is built and people start coming in, and there is no grocery shop there, it's a commercial opportunity. That, oh, come on, people have started coming in and there's no shop, we'll be the first person, we'll have a first mover advantage. Yes. So that's a commercial opportunity. So what is the commercial opportunity here? For auditors, we do not have anything on, we do not have any course as such who's talking about sustainable reporting apart from ACCA. We do not have any such career field which talks on audit of sustainable report. So we the auditors, we the ACCA qualifieds, the classic traditional auditors who have been all this while being auditing the financial statements, it is a commercial opportunity for them. Now we'll be like, you know, my dear client, I am auditing your balance sheet. I charge you this much. But now you have a sustainable report too. That is so difficult to audit. I will charge you double for that. Commercial opportunity for the existing auditors. Do you understand? But not just commercial opportunity, but auditor is always hanging in the middle with ethics. Don't forget. Just imagine him, he's always squeezed in ethics. He can't be unethical, he can't have self-interest. Come on. He can't be so honest. Point is, can he do audit of sustainable report because he does not have experience in it? It is the first time. When I will teach that new subject, business and sustainable reporting, it will be first time for me too. When SBL was introduced, the first quarter when it was run, it was the first time there was a threat. People might have taught it wrong. When pre-populated was introduced, there was a threat. It would have been taught wrong. Are you understanding my POV? That here it is a commercial opportunity, but there will be challenges. There will be threats related to ethics because the auditor will not have prior experience. He might treat it as the auditor might just treat it like just like that, just an opportunity. He might think, oh, sustainable report, nobody reads it. Just a moral science kind of a lecture which everyone skips. But I can charge extra, you know. Nobody reads the sustainable report, but I can charge extra. And even if I don't know about it, I can still assure or I can give an assurance on sustainable report. Is there a possibility that auditor can develop such an mindset or attitude? Because nobody in the market is giving this service. Nobody in the market knows sustainable reporting. Hmm. Right? So this is a kind of a fraud, right? This is a fraud, right? Which auditor might do. So that's what we are talking about here. But before that, let's understand, to avoid this fraud, to avoid such an issue, what is ACCA planning? In August 2023, ACCA has issued an exposure draft. Exposure draft is a pre-standard, something which is not yet standardized, which says that this proposed standard will serve as a comprehensive standalone standard suitable for any sustainability assurance engagements. It will apply to sustainability information reported across any sustainability topic and prepared under multiple frameworks. The proposed standard is also profession agnostic, supporting its use by both professional accountant and non-professional assurance practitioners. Now, what does that mean? Profession agnostic. I understand everything. It's a fraud, Manan, because you will be exploiting people who are not, sure about your service. That's how it's a fraud. But wait, what is profession agnostic? Don't you think that we were auditors of balance sheet and P&L because we knew IFRS? Do you agree with me? We were auditors because we knew IFRS. Agreed? I'm waiting for your yes. Who knows sustainability? Who knows environment? Is it us or environmental activists, NGO experts? Are we environmental experts? Did we study environment? Did we study sociology, society? Did you ever think this can be questioned? You all keep on asking me, ma'am, will AI take over? I think environmental experts will take over. But we are lucky enough that ACCA has introduced sustainable reporting, okay, as a proper subject in SBR. Now it's not just about IFRS, it is business and sustainable reporting, right? But there are still some professions who do not talk about sustainable reporting as at all. They just talk about it in one page or two page. But in future, it will not be a one pager or a two pager concept. It will be the whole life of the business. So that one page won't suffice. So in still some countries where ACCAs are not there, maybe some other professions are there, maybe an environmental activist is hired to give an assurance that the sustainable report of a company is true or not. There could be a possibility of it. You understand this? That is why, that is why they're saying that this particular standard on sustainability assurance is profession agnostic. It's not just for ACCAs. It's not just for normal accountants. It can be for anyone. Psychologist, sociologist, environmentalist, anyone. This has never happened before. All our standards, IFRSs, everything addressed accountants. This is the first time we have opened doors for others as well. Because that's where we are heading to. Are we understanding the point of profession agnostic? I'm just explaining you the word profession agnostic right now. Don't jump to the next topic. Okay. Next, there are two key principles to highlight. What are the principles? First is that it can be used for multiple frameworks. So not just for IFRS S1 and S2, but any sustainable reporting standard. Like we have one in EU, or we have the task force on climate related, whatever. It can be used for anything, integrated reporting as well. Second, it can be used by any profession, provided they adhere to relevant ethical requirements. Now, this cannot be used by a person who's a maybe BCom graduate who does not have any ethics. It can be used by doctors. It can be used by people who are complying to certain code of ethics. We are not saying ACCA code of ethics. Like lawyers also have their own ethics, doctors have their ethics, environmentalists, they have, if they have done a proper kind of a degree or doctorate, they have their ethics. So we need to see whether those people have ethics or not, right? Then what is sustainability? I'm not explaining you what is sustainability. You know what is sustainability by far. Like I use the resources in such a way that I can use it properly and my coming generations can also use it properly, right? For that, I need to make sure that I'm not impacting the climate, I'm not doing emissions. All this is stupid. No need to pay a lot of attention to it. Just give a one reading. Now let's talk about application of ISA 5000. Now, ISA 5000 can be applied whether the engagement is designed to provide limited or reasonable assurance. And it can be applied to all of an organization's sustainability disclosures or just a part of them. The proposed standard is long and complicated. What are the objectives? Number one, first objective is to obtain reasonable assurance or limited assurance as applicable about whether sustainability information is free from material misstatement. So we can just, take jot down this, because let's make notes out of it, which we can revise one day before the exam. Okay. Sustainability assurance. So, first of all, we'll talk about the ISA 5000, which is an exposure draft. Its first nature is that it is applicable to multiple frameworks. Second is it is profession agnostic, which means it has two subparts, that the person can be accountant or non-accountant, but they should adhere to relevant ethics or ethical standards, or they can be non-accountants as well, like activists or environmentalists, right? Then, what are the objectives of ISA 5000? Number one, what is objective of audit? Same as the objective of sustainable assurance. It will be vary from engagement to engagement. First is to provide either reasonable or limited assurance on sustainable information. Second, to express a conclusion on information through a written report that conveys, that's just like a sustainable, we have audit report. Similarly, we will have sustainable assurance report, where we will give assurance whether it is true and fair or not, to communicate further as required by this ISA. So ISA contains an appendix which illustrates different forms of assurance reports which can be provided, distinguishing between limited and reasonable. We all know the difference between limited and reasonable. In line with other types of assurance engagement, the higher level of assurance that is to be provided, more robust evidence is required. So if you give reasonable assurance, of course, you need more evidences. For limited assurance, you can just be happy with less number of evidences, right? So that are these are the major two objectives of ISA. The third one is kind of vague. Then how do you accept the engagement? See, before accepting the engagement, you need to understand that what work is required. What is the sustainable information which is reported? What is the reporting boundary? That means what activities, resources to be included in sustainable information. Is there any criteria available through which I have to compare and then determine the level of assurance to be provided? So these are the points which we can as it is copy and say that these are the factors we need to consider before accepting such an engagement. So acceptance, procedures. So these are the factors that I have to consider before accepting any sustainable information engagement, right? Simple. Then, okay, planning the engagement. Now, in planning comes the fact that we have to assess what are the risky areas. In reasonable assurance engagement, more work is needed. Okay. So to find risky area, I need materiality. Here we have a concept of double materiality. What is double materiality? We will use the concept of double materiality. So in the planning stage, we will use concept of bifurcated or double materiality. What is double materiality? I will see if some sustainable information is material by number, or I will see if it is material to the uh, entity and material to the environment, to the planet. So I'll consider the materiality of that thing not just to the entity but also to the planet. That is double materiality. That's what we will consider, right? That's what is written here. So it is important to understand that organization will have its own materiality process, including double materiality. This means significance of the impact of a sustainability matter on organization as well as on outside world. These are the two things we have to consider. Where the concept of double materiality is relevant, the assurance practitioner should consider both financial impact and impact materiality when determining their materiality level. So not just materiality by numbers, but also by its impact. Right? Now, when we will be obtaining evidence, do you think it is easy to get evidence regarding sustainability matters? Is it easy? See, sustainable information is not factual information. Sometimes it's related to future, forward looking, budgets, forecasts. So a lot of judgment will be applied there. Sometimes there is no trail or trace, or there is no evidence backing up something. So there can be evidence can therefore be difficult to obtain, and the assurance practitioner may need to exercise significant level of judgment. Right? So we might need to take help from external experts. Now comes the reporting part. Again, reasonable assurance is very difficult to give in sustainability reporting because, again, as I said, it is not a fact. How do you impact the environment, the planet, the society, the humans? That is not something which anyone can define or anyone can say, yes, you are correct. So it's very difficult to give reasonable assurance because there is no backing up evidence. It's difficult to get a conclusive evidence in this case. Right? Then there are risks, greenwashing and other risks in sustainability reporting. What is greenwashing? When someone specifically tries to mislead, it's more like creative accounting. So this concept is very similar to that of creative accounting, where financial information is manipulated to serve the needs of preparer rather than the needs of the users. Greenwashing can be considered to be fraudulent reporting. Added to this, the systems and processes that are generating sustainability information are often subject to change. So therefore, there's a higher risk of error as well as deliberate misstatement. So what can we do to avoid this? There is a need of professional skepticism and to document how this has been applied. So greenwashing is a big risk. So you can say in sustainability assurance, the auditor needs to maintain skepticism against greenwashing. It's just another word for creative accounting. Creative accounting was for financial statements. Greenwashing is for sustainable report. Now, ethics of the auditor. How can they be compromised in this case? So assurance providers needs to adhere to relevant ethical codes just as in case of audit. So the principles of ethics, they remain the same. Okay. So the most obvious threat to ethics related to assurance providers is professional competence, of course, because you don't have knowledge, training, and experience, as I said. While many organizations have been reporting on sustainability matters for years, for assurance providers, the new reporting standards are largely unfamiliar territory. So, this is a real issue that professional accountants lack the necessary knowledge for the sustainable information. An assurance provider could have a self interest threat in securing an engagement to support sustainable information, but still don't have enough. So, it's like you will have self interest threat because you want more money, but you don't have knowledge of it. There could be a self review threat if an assurance provider is performing an external audit as well as sustainable assurance. In this case, assurance provider should make sure separate teams are used. So basically, what are the ethical threats where auditor might face in sustainable assurance? Ethical threats. Number one, self-interest. Number two, professional competence and due care can be compromised. It is an issue because we have not done this work before. It's a new concept. Number three, self-review. Because if we are reviewing the financial statements and also the sustainable report, we might end up checking our own work. Right? So these are the three things which will be future threat in this case. That's it. This is what we have for sustainability assurance. Do you understand it? Yes. There are no safeguards, Anika. There are no safeguards yet. Just separate teams can be used for self review. Yes, Aditya, you are correct. I'm grateful. Shubham, I can't predict it, but you should be ready with everything, no? Okay, so that's it, guys. This is what we have for our sustainable assurance. Data analytics. You know what is data analytics? I told you it's just like you use computer assisted audit techniques. Similarly, you can use certain softwares which will help you segregate scattered data, big data, right? What can be examined is what are the threats of data analytics or what are the positives and negatives of data analytics. Positives can be that it will increase our analysis skills, we'll be better able to identify risky areas, we'll save time, we'll be more efficient, cover more content, of course. Detection risk will reduce. What is the biggest negative of data analytics? What about the data leakage? Isn't it? What about our clients' data leaks? We were just analyzing for our audit process and we end up being the reason for their closure of the company. Privacy issues, manipulation. Yes. Then there can be lack of human judgment, incorrect results. Yes, Aditya, it will give you civil liability. Correct? So these are the few things that you can consider regarding data analytics. Data analytics is a very soft and cute topic. Sustainable assurance is something which was little difficult, so you can read it out. That's it. This is what we were supposed to revise today, and almost like we've touched upon at least every direct theory question and most of the areas. Of course, we can't do the whole subject of audit in one day, but I'm sure it must have helped you in the revision of audit. And I'll be sharing these notes with you right after the session. And how many days are remaining in our exam now? Yes, how many days are remaining in our exam? 3 days. Mehak, IFRS 18 won't be tested. If it is tested, it will be like an like they might ask you to frame audit procedures around it, but it is not there in your syllabus as such. So no worries. Okay, right. So 3 days to go. What are we doing in the 3 days? Yeah, that's my last question that I'm addressing. What we are doing in the next 3 days. So tomorrow, we are going to do questions. Okay. Today you have done revision with me. Tomorrow, if you are still left with some kind of in case you are left with some kind of questions, you can utilize tomorrow day for questions. But if I was you, and I still remember my days from AAA was the most dreadful paper that I gave. uh, because of its nature, you must have realized why I say dreadful. Time consuming, too much extensive, all of that. So if I was you, and when I was you, I just read the notes. I just read the notes because I know in the exam it's the content that I write. Application at the end of the day, I've done many questions and I can manage it. At the end of the day, it's the content that I want in the head so that I can put it on the paper. So in my case, it was paper, your case, it is screen. Just a metaphor, okay? So it's very important that you actually now just stick to the notes. Now, notes does not mean pick up new notes. No. Whatever notes you have used, whatever content you have used, read as many times. And you have to do reading based on what is important. You know what is important. Procedures of standards, you can do yourself now. Procedures can be done yourself now. You know how to make procedures. You can read group audit. You can read ethics table. You can read the audit report and review part. You can read the due diligence part, other assignments part. You can read the some gray areas which you always forget in the paper. Whenever it comes, you're like, oh, what was that? What was that? You can read those areas. And I still remember I was giving this example yesterday in the SBR doubt class. When I was in my 12th standard, I did the whole business studies paper like 2 days before. That was the most ignored subject of my life because I had proper tuitions for accounting and everything. And even physical education was something that I did very well. But still, it was business studies, which was a pure theory paper, which I just did 2 days before the paper. So, what I want you to know from it is that we have the capacity coming from whatever background we are, the commerce background, we have the capacity to study a book from the scratch, a new book, literal new book, 2 days before the exam, and still not just pass, get something in 80s and 90s. We all have that capacity. We dilute that capacity with what? Overthinking, self doubt, too many resources, hopping on from one thing to another. Today, someone will put something on the WhatsApp group, you'll move towards that. Someone will ask a doubt in the group, you'll be like, oh, I have not done this, let me do that. Forget about it. Leave the WhatsApp groups now. If you are in group, I'm not sharing anything after this. Okay? So you can just mute those groups if possible. Let them be. Let them do whatever they want to do. So you are going to read the notes. So if you even read the notes from the scratch now, you can still pass. But imagine you guys have already read the notes. I'm just asking you to revise. So you can complete the notes twice or thrice in the given 3 days. Do that. That's the best strategy. For SBR, I don't suggest this. For AAA, I do suggest this. Correct? Yes, Natik. That's sufficient. No question practice now. If you have done the pre-mock, good. If not, you can just watch the debriefs on the portals of ACCA, right? And then you can just focus on the note. Okay? That will be shared tomorrow's. Yeah, tomorrow you can attend. The one thing you have to do, attend grand revision of SBR tomorrow. Sorry. 7 p.m. Indian time. Uh yeah, 7 p.m. Indian time. Reem, I would suggest if you can watch ACCA's debrief around it. If you want, I can make my debrief also. But I think ACCA's debrief is way better because, of course, that is coming from the examiner. But if you want, I'll post it maybe around by tomorrow evening, if that is not too late. I'll make it available before tomorrow's grand revision. Okay? Right. Not a concern. Okay. So I think that is it for today, guys. Thank you all for your patience and bearing with me. And I'm really sorry if I was not in that much energy today. And wishing you all the very best. And I'm glad you guys have joined in. And yeah, just trust yourself, trust your preparation. I know you guys can do it. It's just 3 more days, and then just think about the party that you're going to do after 3 days. And just keep going with the flow. Don't think. Don't think about anything. Don't talk to anyone. Don't think. Listen to your favorite song whenever you're stressed. Go for a 5 minute walk. Have good amount of water. Take care of your health and just focus. And I'm sure you will be able to pass with flying colors. All the very best. Lots of love and blessings to all of you. Thank you so much. Thank you. And please take care of your health. I think this weather is not good. There's something like a flu going on. When you go for an exam in the center, wear a mask. Okay? Yeah. Take care. Goodbye. Good night. Bye bye.